Well, good morning, everyone. It's March 12th. It's a Thursday, and we've got a lot to talk about. But before we get into it, and I'm looking at the market right now, and things are not looking pretty, but there's light at the end of the tunnel. So before we get started, I want to remind you, I'm hosting an event, 1 p.m. Eastern Time. You do not want to miss this event. It could be the difference between blowing up your account, literally between blowing up your account and potentially making up to 6 times your money during and after the current flash crash. I'm not kidding. It could be the difference between a loss and 6 times your money. No joke. I'm not kidding. It's perfect for today's uncertainty in the markets because it makes money when stocks go up and when stocks go down. A lot of money when stocks go down. If you haven't reserved your seat, you don't want to miss it. This is your final opportunity. Follow the link below. I'm looking at the markets and all I'm seeing is opportunity. Opportunity, opportunity, and opportunity in front of us. Take advantage of it. Follow the link below. Now, let's get into today's report. A lot of things happened. President Trump, he talked yesterday. He imposed a travel ban on most European countries, UK's excluded, but it made a very little difference in terms of what's going on with the economy. He hinted at a plan for tax cuts and other economic relief, but has yet to unveil details. Lawmakers have resisted his proposal for a cut to payroll taxes. We'll see how that goes. Investors are looking ahead to the central bank policy meeting, expecting it to cut interest rates and offer more monetary stimulus. Though, experts say its government must act to help the economy. And I think it's going to happen. Now, Thailand's benchmark plunged 10% in the afternoon session that happened overnight, triggering a 30-minute halt in trading. I wouldn't be surprised if we saw that on Wall Street. Many analysts expect markets to swing sharply, including me, until the number of new infections stop accelerating. In the U.S. right now, the number of cases has topped 1,000. The latest is that Tom Hanks and his wife Rita have it. How they got it, God only knows, but they got it. Worldwide, more than 126,000 people have been infected, with over 4,600 deaths. Now, I'm going to tell you something interesting. What I'm finding now is the number of deaths, the ratio of deaths versus infections is going down tremendously. Before they thought that 4, 5, 6% of people who got it would die. Now the numbers are going to 2% or lower. As a matter of fact, from the latest numbers, the average 45 to 50-year-old has about half of 1% chance of succumbing to this virus. So it's not all that much stronger than the flu, and I think we're overreacting a little bit, but the markets are doing what they're doing. So let's talk about the economy. Jobless claims. Man, if this thing wasn't going on right now, if this thing was not striking the market, our numbers would look stellar. Look at that. 211,000, perfectly in line with estimates. Now, again, this is still giving us data that happened before all of this coronavirus. And remember, coronavirus is only now impacting this country. So these numbers, you got to take them with a grain of salt. The PPI was slightly lower. Producers Price Index was slightly lower. But again, you need to understand the markets are being driven about 99.9% by the coronavirus. Speaking of the coronavirus, overnight, the Dow Jones is down 5.86%. If it drops another less than 1.5 points, we're going to be in a limit down market. Now, we broke our support level right here at the 24,700 level yesterday fairly quickly. The next level of support is going to be, let me show you this. The next level of support is unfortunately going to be all the way down at the 21,500 level. And I think we may get there before seeing a complete shakeout. Officially, the market's in a bearish mode. But again, remember, we have fear driving this market, not prices. So that's a big, big, big difference. And here's what you need to understand. When volatility is huge like this, that's panic driving the market. If volatility was like this, I would be scared. Because see, volatility like this, when volatility is small and trade like right here, that's meaningful buying pressure. But this type of selling pressure, that's just panic. And typically when you have panic, it tends to revert back very, very quickly. So I'm actually happy that this this is causing a shakeout at this rate because as long as volatility stays high, and it's right now about 3 to 4 times higher on average, it's probably about 6 to 7 times higher, we're going to see a comeback, a bounce back very, very quickly. If volatility died and the markets became choppy and didn't react to anything, that's when you have no fear in the market, and that's when you have traders actually making trades based on commitment, not fear. Everything you're seeing, this is just fear right here. And fear usually this is fear. And see how fast it comes back? So this will come back, but we haven't bottomed out yet because we don't know how bad this coronavirus is going to impact this country. It's a moving target. First, Asia got hit. It's pretty much over in Asia. We're now seeing the aftermath. It's striking Europe. It's in the middle of Europe right now, and it's moving slowly into America. And if we can do this travel ban, if we can take some precautions and minimize it, then this will be a big nothing, and the markets will revert back to normal. Now, T-bonds are following. It was interesting because for the last 2 sessions, even though the market was going lower, Treasury bonds were not. They were kind of mixed. I think that has a lot to do with the fact that a fund got blown out, was shorting the bond market, got blown out, and I think there was a lot of liquidation over the past few days. There's been stories about that. You may hear it on Wall Street. But it looks like the shakeout is done, and it looks like the long bond, TLT, the T-bond, the 10-year note, anything over 10 years is the long bond. So if you look at the TLT ticker symbol, you will see that it's moving exactly the same way right here, moving higher. Let me just do that for you here. That right here. And it looks like it's going to rally a little bit more and go higher again, especially if the market goes down. Remember, there's a natural inverse correlation between bonds and stocks, but it's not a 1-for-1. It doesn't happen always at the exact time. It'll happen when there's a major event, as you could see right here, but it doesn't happen always at the same time. So in other words, it's not a good day trading vehicle to do inverse relationships, but it does over a week, over 2, over 3, you will see an inverse relationship, and it looks like it's starting to come back, which will only increase our hedge and make us more cash. Now, volatility is through the charts. Folks, this is the highest volatility I've ever seen. That means market is in full fear mode. I mean, complete fear mode. The VIX, let me look at the VIX, the regular, not the futures. Let's see what's going on. Oh, dollar sign. Let's take a look here. Yeah, I expect it to open up at 61. Look at that. Let me look at 20 years. Look at that. Highest level. So it looks like volatility can't sustain themselves. The markets are in full-on panic mode. This may be very, very close to the bottom. And again, that's the circle we drove. We were waiting for momentum levels to decline on the NASDAQ. It looks like they're going to decline. It looks like we need a full flush out, which means keep your eye out on momentum levels to go from 25th percentile on the NASDAQ to about 18, 17%, maybe end around here. If you look at the momentum levels on the SPY, let me show you. This is the overall market to give you some comparison. The overall market right now, wait, hold on. Let me show you the overall market. This is the all the stocks in the S&P 500 that are trading above $2. To give you a perspective, this is the percentage of those stocks trading above the 200-day moving average, only 13%. All right? If you look at the S&P 500, it's 12%, right in the same line. And if you look at this chart, you will see that we're below the line. We're getting towards 2008-ish levels. But the NASDAQ is still being stubborn. The NASDAQ is still near, as you could see here, 25th percentile. So the broad market's in the teens. This is still in the 25th percentile, and it's expected to go lower. You see that? I'm expecting this to dip to around here, maybe even somewhere around here. But the bottom line is the majority of the downside is behind us. This is just a shakeout right here at this point. So expect very little more, but yes, there is going to be more downside, especially today. Expect a shakeout and the market to start moving up, because I think the economy is over-evaluating or overvaluating the impact that this coronavirus is going to have on the market. And again, if nothing convinces you of that, look at the volatility. We've got the high. People are more scared now than they were in 2008, and that's usually telling us that markets are overdone. Expect a little bit more of a shakeout, maybe another 1,000 points, so that the NASDAQ stocks could bottom out, and then expect more upside from the bond market over the next few days and expect volatility to subside. It's going to get a little worse, and then it's going to get a lot better. And I really, really mean that. Folks, don't forget, register for today's event. It could be the difference between losing your butt and making 6 times your money. I'm not kidding. It's perfect for traders that are hurting right now and are looking to make up to 6 times their money fast, easy money. Click the link below. It's happening today, 1 p.m. Eastern Time. You do not want to miss it. Folks, if there's one webinar you want to watch, there's one class you want to participate in, it's in the one that's happening today at 1 p.m. Eastern Time. Don't miss out. Talk soon. Have a great day and good luck out there. Stay safe.